Aradhana, everybody is incentivized to maintain discipline, right? There
Right.
are huge financial incentives over here. Saudi Arabia and Russia both have significant buffers in terms of capital. I think Saudi Arabia had $600 or $700 million of reserves, and Russia had a
Yes.
similar number, which they build on, and that's cushion. But if oil prices remain at $25, that cushion gets eaten away very, very quickly.
Interesting.
So that so it's something people can sustain that for a short period of time, the big guys, but even the big guys can't sustain it for a very long period of time. So that everybody's incentivized, and yes, we've had temporary hiccups, but it's hard to see people not be disciplined in the longer term. So look, the first job of any energy investor right now, to be honest, is to be absolutely totally focused on your existing portfolio, right? You
Yeah.
cannot, there is no room for error. These are very volatile times. Uh, we've seen this before. We've invested in 2008, we've invested in 2014, 2015. These are very trying times. You've got to make sure that you're completely funded, your hedge book is right, you've got the cash flows, you draw down on your bank lines. We made sure, the day, when the crisis was kind of coming up, we made sure that we were completely funded. We pulled, we drew down on the bank lines, make sure that liquidity is there. You've got to then make sure that your partners, you often in oil and gas world, you work with partners. You want to make sure that your partners are well funded. If they're not well funded, you've got to be able to step into their place, because then you've got to then carry the project on your own. So for the next, few weeks, maybe, few months, we are absolutely razor focused on making sure that the portfolio is healthy.
Right.
But coming on the other side of it, very confident there's going to be a fair bit of distress in the market. There is going to be a lot of opportunities, people exiting the space. And in 2015, one of the assets that we bought, and we bought it at a really good price, was owned by a Canadian mining company,
Interesting.
which at the time of the oil boom had thought that they would become a diversified natural resources company, and therefore had bought an asset. And when the crash happened, they realized that they would have to actually spend a lot of money to keep the asset. So they said, we're going back to Canada to go back to our nickel mine. We don't want anything to do with this oil and gas.
Right.
And we saw, people exiting countries, non-core countries, and that's where we play, right? We've been in this market for a very long time, so we think there's going to be a lot of opportunities to buy attractive assets, good quality assets, in the next few quarters. But to be entirely honest, you've got to first make sure in the next quarter or so that everything is kosher with your own portfolio. Look, I think Elon Musk should be excited. Um, there was a time, Aradhana, when it was said that high oil prices are good for renewables. Low oil prices are bad for renewables for obvious reasons. To be honest, I think those days have gone. I think the world has pretty much decided that we've got to transition to a lower carbon economy. We've got to, climate change is something that needs to be paid attention to. So renewables, I think, will continue to benefit from that. There's going to be a lot of focus and investment by the government. People like, the general population is going to want to make sure that renewables are a big part of the mix. So we're quite positive on renewables, but at the same time, we think that sometimes people go a little, don't understand exactly the exact background, and go a little bit over optimistic about the prospects of renewable, and that can lead to some distortions in the market. For example, renewables have done a really good job in the last 20 years after $3.5 trillion of investment in renewables. But the fact is that after all of that, it's just 3% of global primary energy. It's only 3%. So it'll have to increase by a huge amount for us to say that we're going to stop fossil fuels altogether. Um, we have some investments in renewables. We've got some investments in wind. We're quite positive around that, around the technology. But at the same time, we want to be cognizant of the fact that world needs not just investments in renewables, but investment in energy conservation, methane and leak detection, more ways of producing conventional energy while using less energy or less carbon emissions. Those are extremely important measures and arguably do more for the environment than just renewables investments. Um, so yeah, we are on the watch out for that. But at the same time, I think, Aradhana, because of a huge amount of focus in renewables, there is a drawing away of capital from the more traditional fossil fuels. There's lack of availability of capital, and therefore the ability to generate returns is that much higher.